All right, morning class. Here we go on some more futures trading. Now I want to do a little bit this morning to try to help you get going. And number one, I want to review what we talked about the other day, kind of just wrap our heads around this thing called the futures market a little bit. So I'm going to bring in here a little presentation and let's just look at it. So summary of our futures market. Remember some things we talked about. One was that the futures market trades contracts, no longer the actual commodity. That's how it started. But the futures market learned that there was value in just the buying and selling of the right to buy those commodities later, those contracts. And so when someone comes in and buys a contract and then later decides to sell that contract to someone else, they're no longer obligated. Or if you came into the market and said, hey, I'll provide you this commodity, I'll sell you the commodity, but then later on, you don't really want to provide it anymore, so you would buy a contract that covers that, and then you're out as well. So that became to be a large use of the market, the trading, and so that's all it is today. It is the futures market, and it trades contracts is what I want to focus on. All right, now there's something else to remember. The real commodity is still sold, but it's able to be transported and stored, and lots of resources came on pretty fast in our country's history. And so that commodity price, that cash price, that spot price, those are really where the corn and the cattle are traded for real processing and real consumption, and those tangible things that people really still do buy and sell, of course. That's still, of course, done, and that's done in what we call the spot price or the cash price. Now, contracts are still a thing. So you could contract to somebody, I want to really buy or really sell you that commodity, and those we called forward contracts. So there are cash contracts, forward contracts, spot price, that's all the real commodity. The futures market is still there, and it offers a large volume of trading. People from all over the world looking at what they think corn will be in the future, and what they think cattle will be in the future, and what they think oil will be in the future, and what they think the value of the US dollar is in the future. All of those are traded in the futures market, and that's really what it is. It's used to buy and sell contracts. Now, there's two people that come to this futures market, and we talked a little bit about the other day. The one is the speculator. In other words, you come to the market and say, hey, I think the price of grain is too low right now. That reaction to the information yesterday in the market has pulled it back and its price is too low. I should buy some of that as a contract in the future. I should buy that contract, and as it moves back up, I should sell it and get out. Or if the contract prices have really spiked up and they say, hey, this is too high, they try to sell that contract, and later when it falls, buy one just like it, and they are out as well, and they make a profit. That's what a speculator tries to do. Now, there's another person in the market we called the hedger the other day, and that's somebody that wants to play in this futures market contract pricing, but they also have the real contract themselves. So those are the things that they do. They trade both. They're called a hedger. They try to manage both. We'll talk more about those examples, but those are just things that we talked about as a reminder. Now, trading futures contracts, we talked a little bit about this as well. You can buy a contract because you think the price is low, and then later on you can sell that contract and hopefully you'll make a profit. The opposite's also true, though. This is the harder part to follow, but you can sell a contract first, and then if the price falls, you can buy that same contract back, and that would make you a profit. So you can enter the market when the prices are moving up and try to make money, or you can enter the market and make money when the prices are going down. One thing's true about a commodity. It's a commodity. It's general. It's generic. There's lots of it. That's a commodity. And if you're in the selling business, like we wanted to sell beef, I would actually want my commodity to be very specific and very unique, and hopefully I can make that worth more. That's different. This is trading the broad commodity of feeder cattle, and there's a little bit of a quality restriction, but it's a very general thing like feeder cattle or corn or wheat or soybeans. And so that's what the futures market trades, is those big picture things. So prices always will go up and prices will always go down. So those are things that just happen in the market. Good example of this in class the other day when I had that corn. And Addison had it. I can't remember. Cameron maybe had it after that. I can't remember who had it. But you had those corn, and you could say, I want to buy that corn, and you could buy it, and then you could turn around and sell it, and you were out. Or you could say, I would sell you some of that corn. You didn't have it at all, but eventually you had to buy some of that corn to provide it to whoever wanted it. That's this same concept, but it fast forwards to today, and that's what the futures market trades. The key to the market is time. Each contract has a time stamp. So a January contract, we're in the end of January right now, a January contract would not be anything anyone wants to buy or sell. So time is important. Okay, now to get all this done, I have not talked about that. This is new and I want to make sure you have it today. There are some terms. The futures market talks about buying, when you buy, but they don't really use buy a lot. Sometimes they do, but buy is a term. There's another term important that's called a long position. So anytime someone says they are long on a contract, they're saying they're also a buyer. That's what that is. Now, there's another term that goes along with selling that is used more often. And when you say you are a seller, you could also say that I am short on the contract. In other words, you could say I am short on corn, which means you are a seller of corn, which means you think the price is going down. So that's the idea of the terms. Buy is referred to also as a long. Short is referred to as a sell. Of course, if you start off buying, what are you going to have to do before that contract matures? You've got to do something. The answer is you've got to sell. So the futures market never allows, as we mentioned before, anyone to show up and deliver anything. The futures market is about, if you're going to be a buyer, you need to get sold out of that contract before it matures. Same thing's true if you start off selling. If you start off as a seller, what do you have to do before that contract matures? The answer is you have to make sure you buy one just like it. That way you're out. So those are kind of the terms. You have to kind of get to know those a little bit. Stock track, the terms are similar. There's some connections, but I want to make sure I share those with you. So in stock track, if you want to start out buying, in other words, you think prices are going up, I kind of threw in some positions the other day and asked you to do the same. A buy is just getting started. Now later on, when we want to get out, we can sell it. So pretty simple. However, in stock track, if you want to start out with a sell, they use the term called short, which is what we just talked about. So in stock track, if you want to sell something, you have to choose that I want to be in a short position. That means sell. Now, how do you get out of that? Well, the term they have is something called cover, which is another way to talk about getting out of a short position. So stock track uses that term. So buy gets you in, sell gets you out of that contract. If you want to start out selling, short gets you in, and cover gets you out of that contract. And I'll show you an example here in a bit. All right, here's some more videos to help. You can scan this QR code and hopefully it's something you can use to learn more about the futures market. I'll go to it right now if I can. There it is. And these are some videos that I have made that are all about the futures market. There's one here about an introduction to the futures market, who uses the futures market. There's an example of selling corn. There's an example of buying corn. So these are different futures market videos that you might go to learn a little more. Okay, let's go and take a look at something else you'll need to make sure you use. CME Group. That's just where you can really get a picture of what's going on in the market. We looked at this the other day. Remember, just go to markets, choose agriculture, and then scroll down through the page to find the commodities that you want to take a look at. And so right away they start with grains, and we've got corn futures, which is something I think I did the other day. If we go through here, we've got livestock futures like live cattle, which is something I think I did, or feeder cattle, which is something I did the other day. You've got dairy, so milk products. You've got fertilizer. You've got lumber. There's quite a few other contracts behind each of these, but those are kind of the main ones that you can look at. The futures market allows you to look at lots of different products, so take a look at those. Let's go to something that's pretty normal. I think I was in the other day, feeder cattle futures. So when you pick a contract, remember, or an area, remember you've got years to look at. Now look at January. That is a contract that is nearly done. You see how it's got 51 on a volume? So like nobody's dealing with that. You should not be trading any January stuff at all. However, March is a month that's out there in the future, and I might have a chance to buy and then sell, or sell and then buy. On that, it has the most volume at 339. And if I click that little chart icon, remember this is where this futures market stuff pulls up, and you can see it. Now, the other day, I mentioned that you like to change this to daily or weekly, either one. I think I chose maybe the week. Yeah, let's go with day. All right, so now I choose the day, and you can see that the market has gone way down on this. You can see the GFH 2022 up here. That's kind of what this is called. It's the March cattle futures. You can see that it had some drops. See, the red just really plummets on those days, and so that's kind of what's happening in that market. Now, based on the history of this, it's been lower, but really some hits in the markets have happened. This hit in the market actually correlates to some pretty big stock market drops. There's some uncertainty in our economy, and it looks like it's hitting the commodity market as well. So the opportunity might be that when the market backs off like this, and it's have a very recent history of higher, I'm tempted to say I should buy some of this. So let's go take a look at that. I'll get that chart out of my way. Hopefully you guys can keep exploring the different commodities. But what is this? How does this work in StockTrack? So I'm in StockTrack right now, and I'll take a look. And I'm in the teacher side, so I can view some other things. But I'm going to take a look at the rankings. And here are some folks that have made some trades in our class. So we've got William and Addison and Cameron. Tough marked up here is leading kind of the pack, but you've all made trades. Most of you, Cameron, you've not made a trade, so make one. And so Logan's got no trades as well. I've got some trades here that have me kind of in the bottom of the list. Paxton has got some very aggressive trades, 7 of them, which you might want to reconsider what you've done there, but let's take a look. I'm losing some money as well, Paxton. So that is something we can see on ranking. Now, how do we work our way out of this, or how do you get started? So in my portfolio, I'm going to go to open positions because I've got some trades that are already happening. If I go here in this BZH2, what is that? BZH2. I thought I traded feeder cattle. Maybe I traded something different. Maybe I traded live cattle. No. BH. Well, ZCH2, that is corn. Go back to here. CH2, that is corn up there. I'm making $2,750 on my corn right now. You can see my profit has actually gone up. This commodity is, see if it'll tell me here. I don't remember what that exactly is. Oh, Brent crude. So I traded crude oil. Wow, that was not very good. That's a tough one for me. Crude oil moves a little bit, and you can lose a lot. I'm losing $3,800 on crude oil. But I tell you what I'm going to do. I've only got 2 contracts of that. I've lost this 19 cents, $3,800. To try to help myself out, I bought it here. It did not go up. It went down, which is making me lose money. So I tell you what I'm going to do. I'm going to click trade, and I'm going to buy 2 more to help myself out. Now, if you click trade, it's trying to get me out, a sell. I'm going to go back and go, no, I want to buy more. And let's see, I've got March is what I was looking at there. So I'm going to go through and choose petroleum. I'm going to choose Brent crude is what it was. Globex, I think is it. There we go. March contract. 2022. I've got 2 contracts. I'm going to put in 2 more, and I'm just going to do it at the market to keep it simple. Preview this, and I need to say I'm trying to do what's called average cost. Average cost is an approach to trading where if you've got a price that you're in at, and in my case, it went down, I'm losing money. If I buy another one, now my cost has dropped. So when the market turns back around, I have a quicker chance to maybe make some money. So it's called average cost. I'm going to confirm it, and then we can kind of see what happens there. If I go back to open positions, if the market's open right now, it's got me now 4 of these. I'm losing a little bit less, but we'll see what happens as the market moves. Now I'm making $2,900 in my corn. If I go take a look at the futures market on corn futures, see the ZCH2, those things correlate. It looks like I am probably looking at, sometimes you have to click on quotes and then you'll see the markets. Yeah, there it is right there, ZCH2. I'm trading March, so that's a good one. If I click the chart here for March, I can see that it has done nothing but drive its way up. Now today, it's down a little bit from where it opened. See the tick over there, and the market's open right now. It just jumped up a little bit more, jumped back down, so you can see the market moving right now. Here's another strategy I can share with you. It's the opposite. Let me go back to Stock Track. If you take a market you're in right now and you're making money, $2,900 on 4 contracts, I can do what's called pyramiding. So I'm going to hit trade. And again, I'm not trying to get out, so I go back to buy. I'm going to go to grains, and I'm going to go to corn. And I'm going to leave it at March. That's where I was at, 2022. I've got 4 contracts. I'm going to get 4 more. And pyramiding is a concept. How do I spell pyramiding? Pyramiding? Maybe that's it. Pyramiding is where you build like a pyramid. And so if you've got a base and you're making money, you add to that base. It elevates it even higher. If you make some more money, you add to that base. So it looks like it's 626.50. I'm going to go ahead and hit confirm. So my hope is that I've got an investment. I've got a contract that's making me money. If I take that profit and go buy more of that, then as the market keeps moving, now I'm going to be working off of not 4 contracts, but 8. So let's go back and look at open positions, and it hopefully will show me that I did get 8. Now, because I bought 8, my cost went up in this case, so actually my profit went down right now. But if the market continues to move, that's going to give me a big push. Honestly, right now, there's so much uncertainty out there in the regular stock market and investment markets. That uncertainty usually shifts its focus to commodities, as we need to put our money there because that's a real tangible thing that we can go invest in. And maybe that's going to drive commodity prices up. I have no idea. Also, the value of the US dollar, as that falls, commodities look more attractive for importers. And so they're buying corn from us. If the value of our dollar falls, our exports of agriculture go value up in the rest of the world because our stuff looks cheap all of a sudden. So that sometimes benefits commodities. So I don't know if we're headed there or not, but I went ahead and made that choice. It's got 2,500. I refreshed my web page, and actually 2,400. So hopefully these are good ideas. I'm losing 3,500 now on my crude oil because it seems to be moving down still today. But that is a risk that I make. Now, that's what you could do if you've already got something out there. What if you want to trade into something else? How do you do that? Well, if you go to your portfolio, or go to, trading, you can choose futures. And how do you get started? Well, first you got to pick something you want to trade. I like to go to CME Group and take a look at what I've got here. And I'm going to go see if I can find something else that I might want to trade. You can look across the grains and the commodities of all types. I'm going to stick with my products here, and I am going to, let's see, I'm going to go try to pick some other areas. Lumber, fertilizer aren't traded very often, so I'd stay away from those. You can look at other products too. All the oil seeds are here. All the grains are here. I'm going to click that grain link and let it show me all the grains I could look at. Wheat futures has jumped way up, that 17 move. So I'm going to go check out Chicago wheat futures. And so I'm going to click that one. All right, Chicago wheat is going to be, again, quotes. Now I can see what wheat's trading for. Again, that's a huge jump in wheat. So very interesting. I'm going to grab that chart and just take a quick look. And looks like a pretty big jump in wheat. It's been trading a lot lower. So I tell you what, March wheat may be a good example that I could do back in Stock Track as a short. So a sell. How do you do that? Trading, futures. You get the choices, right? Well, those two get you in and get you out. Short is the one I need to sell. Remember that term? So I choose short. I choose grains. I choose wheat. I choose March 2022. I'm going to start out with 2 contracts. I'm going to just do it at the market. These terms we'll talk more about later. If I hit preview, I want to short wheat and try to make money on price move down. So I'm trying to look for you to tell me why you're making those moves. All right, so now if I go to my open positions, I can see I've got 3 now, and my wheat contract, the market is a little bit up. I'm losing a tad bit of money there. I think $25 is what you're charged. So that's it. All right, so here's your assignment. I need you to get trading. I'm going to look at how you're trading and watch, and that's going to be how you're graded. You'll also be graded on if you make a profit or not, so try to make good moves. Once you get into a commodity, the market moves fast. You may check the commodity later in the day and see how you're doing. You might watch it the next day. How do you know when to get out? Like when you've got enough. I kind of showed you how to get in more today, but when you want to get out, you can click trade right over here under action. And if you want it out of that corn contract, you can click trade, and it tries to kind of fill the table out for you. It kind of says, hey, you bought before, so do you want to sell now? But you still got to pick the right contract area. You still got to make sure you get the number of contracts right. It tries to fill a little bit out for you, but that's how you get out. When should you get out? Really, it depends. You're looking to make a good profit over here, and so you're going to be looking for things like, 3-4% profits. That doesn't seem like much of a profit, but you're doing it in a short window of time. So if you keep doing that, 3 or 4% a day turns into be a massive profit by the end of the year. So go ahead and try to capture some profits. If you're having some losses, like I have here on mine, you can go ahead and get out of that loss as well. But I try never to take a loss. If you're in a loss, use average cost to help yourself out. All right, lots of terms, lots of things to talk about. What you can do with your time is get to trading.